Excellent. I think we're back now. So thank you everyone for joining us for the next session. My name is Bart Canters and I'm the president of the Ready Mix Concrete Association of Ontario. So it's my pleasure to introduce our next speaker, who's going to be address topic of addressing the economy. Where are things going? So our next presenter is Alex Carrick. He has a degree in economics from the University of Western Ontario and the University of Toronto. For the first 13 years of his career, he worked for the Canadian Institute of Steel Construction. Oh, I'm surprised I could say that. For the last 3 decades plus, he's been with the company that's become ConstructConnect, first as a Canadian chief economist and then as the US chief economist as well. He's written many articles and delivered new presentations on the world, US, and Canadian economic and construction outlooks. So Alex, thank you very much for joining us today.
Well, thank you, Bart. My pleasure to be here. I very much look forward to this, even if it is just virtual.
Excellent. Oops.
Oh,
I think Giovanni said the Masters wasn't on today. I don't know what happened there. Okay, let's close that. That's inappropriate.
Doesn't look anything like my presentation.
There we go. We'll get back on track here.
I like it. I like that. That was cute. Okay, next slide, please, then, Bart. Okay, so everybody talks about how strong the U.S. economy is, and it's kind of held up as the standard in the world. But I'd just like to show you something here. For 20 years to 2019, average GDP growth in the United States and Canada was exactly the same. And that's whether you include the recession years of 2008-09 or you don't include them. If you go down at the bottom, you'll see it's either 2 plus 5% per year or 2 plus 1% per year. In the zeros, Canada grew a little faster than the US, but then since 2010, that's been the other way around. In the earlier period, Canada had mega projects and so on. So that helped Canadian growth. Now, last year, the United States contraction was 3.5%, whereas Canada's was 5.4%. So there was that 1 year where the US did relatively better, but that's because Canada locked down tighter and faster than the United States did. So for 2021, we're probably talking about growth in both countries of between 4.5% and 5.5%, maybe even 6% for the U.S., because the U.S. has got a huge amount of stimulus that's coming on stream. Next slide, please. And this chart here was prepared before. You have to prepare these slides well in advance sometimes, and the labor market data came out today. So the key numbers here are really the jobs clawback ratios. And in the United States, the clawback ratio is now close to 60%. The jobs clawback ratio in Canada has gone up to 90%. So we're doing pretty good in getting back the jobs. And by that I mean between February and April of last year, that's when the big drop in jobs occurred because of the arrival of COVID-19. So we're just measuring how many jobs, what percentage of the jobs that were lost in that period have been recovered. And in the US, it's 60%, and in Canada, it's 9%. Next slide. And Ontario is now up to 80% because in March, Canada's jobs increase month to month was 300,000 jobs. And in Ontario, it was plus 180,000 jobs. And if you look at some of the numbers down the right-hand side there, you can see that even last manufacturing had fully recovered its employment level compared with what it was last year. Now, here's something else to keep in mind, that as of next month, the year-over-year comparison is going to be much better because it was in April of last year that the numbers really sank. So you're going to get this base level effect. And that means that year-over-year jobs, rather than being deeply negative, are going to start being positive. That's going to contribute to confidence. And I guess I would say early on that I'm pretty optimistic about where the economy will be going, although there are some real yellow caution flags to be aware of. Next slide, please. And this chart here, this just shows the number of manufacturing jobs and the number of construction jobs in the country. And you can see that since 2000, the number of manufacturing jobs fell very dramatically there for a while because of offshoring and automation, and that sort of thing. And but the number of construction jobs has kept climbing. And in fact, it's almost a case where you could imagine there being convergence. Now, at the very end of those curves, you can see that manufacturing jobs are back to where they were before the coronavirus, and construction jobs aren't quite back there. Now, I would postulate, it's a big word, don't know why I'm using that one, but I would theorize that perhaps this trend isn't going to continue. I think that manufacturing may be one of the areas that will start to pick up. And one of the things that might contribute to it is more construction jobs becoming manufacturing jobs. And that's part of the high-tech changes that are going on. So there's already a trend towards more prefab construction, which is really manufacturing. Next slide, please. Now, you're probably wondering why I'm showing you a slide on U.S. foreign trade. Well, Canada is still highly dependent on the U.S. economy. And back in the 00s, there was all kinds of talk about the twin deficit problem. A federal government deficit of $1 trillion and a trade deficit of $1 trillion. And then after the recession, the 2008-09 recession, those problems, they kind of disappeared for a while. Well, they're back with a vengeance. The federal government deficit this year is going to be over $3 trillion, and the trade deficit in goods is going to be over $1 trillion. And this has implications, because if you've got a trade deficit that large, there's really only a couple of solutions to it. And one is a devaluation of your currency, and or two, which is an increase in interest rates. So when the Federal Reserve says that it's going to keep interest rates low forever, there's the possibility that they're blowing smoke on that subject. Next slide, please. And Canada's position. Since the last recession, Canada has mainly been in deficit on trade, and a surplus contributes to more GDP growth. A deficit takes away from GDP growth. So having a deficit in trade has been slowing down Canadian national output. And the biggest reason for this is that commodities have not returned to the super cycle that they had back in the 00s. Now, there is a possibility that a next super cycle in commodities is approaching. Next slide. So talking about Ontario more specifically, these are 19 key export products provincially. So it goes and it looks at what the major export products are in the provinces. And you can see, and this chart here was for last year. And the only export product that really stood out was Saskatchewan farm products. And the products for Ontario, consumer goods, an increase in exports, but all the other categories, metals and minerals, petrochemical products, industrial machinery, and motor vehicles, all in decline, some of them substantially in decline. The two biggest provincial goods export categories that are by far the most important for Canada are Ontario automotive and parts products and Alberta energy products. Next slide, please. Now, this is only 1 month of this year, but already the numbers are looking better. So let's hope that this maintains throughout the whole of 2021. Next slide, please. And this shows the dollar level of exports by the provinces. And even though Alberta is known for big exports of oil and gas, Ontario really leads the country in total exports. So it's important to have strong export markets. And that means it's important to have a strong U.S. economy. You can see that it's only through 1 month, but Ontario's exports are in first place, are double the level of Alberta's exports. Next slide, please. Now this chart's kind of fascinating because we've kind of grown up hearing about how dependent the United States is on imported oil from Middle Eastern OPEC nations. Well, all of that has changed now. And in fact, in the export statistics that the trade statistics that the U.S. publishes, they don't even bother to break out OPEC anymore. They've dropped OPEC as a separate designation. 2/3 of U.S. oil imports by barrels come from Canada. And if you don't have pipelines going to the U.S., and the only way that you're going to keep having increases in Canadian oil going to the U.S. is going to be through rail, most likely. But 2/3 of American imports come from Canada. You can see OPEC nations as a whole down there at the bottom, 8.4%. Saudi Arabia, 3.8%. The U.S. isn't importing oil to anything like the extent that it used to either, because the U.S. has ramped up its own production through hydraulic fracturing. Next slide, please. So right now, inflation is not a concern, but a lot of people are worried that it might become a concern. And there's justification for that. Wages are increasing faster than they have in a long time. Part of that is because a lot of gig workers have dropped out of the calculation because they don't have jobs. But it's also, there's been special pay incentives for people working at Amazon and some first responders and so on. And then material prices are starting to rise. Oil is back up. You know, at one point, the price of oil was less than zero, and it's back up around $50, $60 a barrel. And there's some other commodity prices that are increasing. Now, on the wage front, let me just point out something that's really kind of interesting, because there's all the talk about deglobalization. And if you have deglobalization, that changes the balance of power between management and labor. Wages have been kept down for 2 decades because workers have known that if they became unruly in their demands and so on, that their jobs might be sent offshore. But if there's deglobalization and the jobs come back to North America in logistics, so on, then more power transfers to the side of labor. So that's something to watch for. And you'll see in this chart down at the bottom, gasoline prices, well, they're down year over year for over a year, but they're starting to increase again. So that's one of those commodities that's on the move. Next chart, please. And here we have inflation as a year-over-year percentage change. And I just point out that in the box we talk about some products, and the price change is very much tied to the demand change that's been forced by the pandemic. For example, hotel and motel room rates are down 18% year over year. Air transportation costs are down 7%. If you look at US numbers, the air transportation cost is down even way more than that. So there's a real price pandemic tie-in. Next slide, please. But here we get into some construction items, and you can see that in the forestry sector, this is the definition of prices skyrocketing. This is the producer price index series. It's comes out of the Bureau of Labor Statistics in the US. But all commodities being priced mainly in US dollars, this gives an indication of where prices are going, regardless of whether you're in the United States or Canada. And you can see the big climb in lumber prices. Huge increases in softwood lumber, for example. Next slide, please. And we have a similar sort of situation, not as dramatic at this point, happening in steel. And copper and aluminum prices have been increasing fairly rapidly as well. Next slide, please. Okay, so now we get into the subject of structural changes in the economy and how business is being conducted and how demands are changing and consumer demands are changing and so on. And so this is retail and food services sales. And this chart is in the United States. This is the American chart. And the top one, non-store retailers, their year-over-year sales are up 26%. And there have been times in the past 12 months where that figure was up 30%. So all the talk about bricks and mortar retail going to the internet, it's being verified in the numbers. And then if you go to the bottom of this chart, you get price effects on retail sales because clothing and accessories, the price of those, going back to the inflation chart, is way down, and retail sales are way down. Now, this is a chicken and egg sort of situation. The price goes down, the sales go down, the price goes down, and so on. Gasoline stations, because year-over-year gas prices of last year were quite negative, and gasoline station sales are not very strong. Okay, next slide, please, which is the same but for Canada. And one of the fascinating things is that retail sales for building material and garden equipment, the construction sector, are ahead 26% year over year. Now, this is a sector where year over year sales really didn't suffer very much, even after the spring of last year, because construction was basically judged essential. Certainly in the United States, there was a brief period of time where it was shut down in Ontario and Quebec here. But construction mainly has been allowed to proceed. And then there's people working from home, so there's been do-it-yourself activity. And then there's restaurants where they built patios and so on. And building material sales helped very well. And again, if you go to the bottom of this chart, you'll see that price affected, there's sales and retail, very, very weak. Clothing and accessories, price of men's sports coats, men's pants, women's dresses, way down year over year, and sales in that category very sharply in the negative. Next slide, please. And this is just retail sales by province. And I guess the story for the OGCA is that Ontario is down at the bottom there. And Toronto and Montreal certainly aren't doing as well as Vancouver. Now, if you go back to the jobs chart, British Columbia has recovered all of its decline in employment, plus some. So British Columbia economies, certainly on the labor front, is doing pretty good. And you can see that in terms of retail sales that it's doing fairly well also. And I'm not that worried about the Ontario numbers. Ontario was hit quite hard by the coronavirus, and once we have the herd immunity and the vaccinations, I think the Ontario economy will be coming roaring back. Next slide, please. Now, what analysts are pinning a lot of their hopes on is the savings rate, because the savings rate is shot way up. Savings is disposable income less taxes. So there have been income supplements, very substantial income supplements, and people haven't had the same choices where they could spend money as they did in the past, like not on concerts. People haven't been going to concerts, they haven't been eating out at restaurants, and they haven't been traveling, and there's a whole list. So the savings rate is shot up, and at one point it was 28%, and it's still high at around 13%. So the thinking is, once people are confident about going out again and mixing with the masses, that this will unleash the floodgates of spending. Next slide, please. And here's an example of where some of that money is going to go, because these kinds of slides you just don't see in economic textbooks. I mean, this chart shows the passenger count on Canadian commercial airlines, and it just sank like a rock on account of the coronavirus contagion. And a lot of people are addicted to travel. So once people are feeling more confident, it's not going to happen overnight, but there's going to be this money that's going to wash over the economy. Okay, now let me just tell you a little bit of a story about consumer spending and retail, because this is a little bit confusing. Everybody knows that consumer spending is 70% of the US economy. And in Canada, it's 55%, because Canada is more dependent on foreign trade. So that's consumer spending. And the inclination would be, well, okay, retail sales, that's got to be the big portion of consumer spending. Well, it isn't. It's not even really half of consumer spending. The other half of consumer spending is services. And services is spending on bars and restaurants and travel and hotels and motels and concerts and all that sort of thing. And that's where the trouble with the economy still resides. So retail's come back fine. It's that services component of consumer spending that is still lagging very significantly. Next slide, please. We're not going to spend a lot of time on this. This is just the unemployment rate in the provinces and the year-over-year job change in the provinces. And again, you'll see Ontario. Ontario isn't in the top part of these charts. The provinces that are performing better than Canada in terms of jobs growth, except that it isn't really jobs growth, it's smaller decline in jobs, are above the red bars, and better unemployment rates, same story, they're above the red bars on the left-hand side, and Ontario's below red bars in both cases. But I'll have to look at the March statistics and see if that's helped Ontario move up. Next slide, please. And this is just the unemployment rate in Canada's 6 most populous cities. I cover both Canada and the United States. And in the United States, There are 51 cities of 1 million population or more each. In Canada, there are 6. So it's one of the defining features of the two countries, of course, is the population difference. But in terms of the unemployment rate, the star city has been Ottawa. Ottawa is number 1 with the lowest unemployment rate, and Toronto's in 5th place. Now, Ottawa is a government town, so the unemployment rate you would expect to be lower in a government town. And it's the same in the United States. Washington generally has had a lower unemployment rate than other cities, most other cities. Next slide, please. This shows on the left-hand side year-over-year jobs growth in the 35 CMAs in Canada, census metropolitan areas. Remember, there's only the 6 with populations of 1 million or more each. But there are what are termed 35 census metropolitan areas, so they're the smaller cities. Some of them still quite sizable. And then the right-hand side is the unemployment rate. So if you're near the top in both of these columns, then you've got a relatively better labor market. And the Ontario cities that are near the top in both columns are London and Kingston and Ottawa. So how does this relate to housing prices? Because everybody knows that's the really hot topic right now is housing prices. Well, the Canadian Real Estate Association has a price map. Just go to CREA and you'll see down the right-hand side under market statistics, a price map. And house prices in Canada, nationwide, are up 25% year over year. And in Ontario, they're up 25% year over year. And in London and Ottawa, they're up at 30%. And in Kingston, they're up 37%. And in Toronto, if you look at the map, they're up 15%. Next chart, please. So why are house prices so wonky in Canada as opposed to elsewhere around the world? And I have a theory about this. And it relates to investment opportunities. And here's a chart showing the Toronto Stock Exchange Index. And since the last major trough, which was February 2009, the Toronto Stock Exchange it's doubled, but not by much more than that. So Canadians, I think, because of the cold weather, I'm just talking out of my hat here, but maybe because of the cold weather, are more cautious than citizens of a lot of other countries. So we don't have a lot of venture capital firms and that kind of investment that would take place in the stock markets. Next slide, please, Mark. And this just shows the high tech investments in high tech, for example. So NASDAQ this year over year, is 54%. Just in a year, 54%. And Russell 2000, which is the small cap index, it's ahead 49%. And then there's some other indices around the world that are doing fairly well also, which is an indication that the rest of the world is starting to pick up too. And most of the indices that are doing well there are in Asia. Next slide, please, Bart. But anyway, I was going on about the stock market. And the Canadian stock market, TSX, it's very much into commodities and into financials. And you will see that since February of 2009, the TSX is up 122%. NASDAQ is up 857%. I mean, that's just incredible, 857%. So if you're talking about investing in the stock market in Canada, I mean, you can put your money into American funds and so on, but then you're taking a risk about currency values. But maybe real estate is a better bet for Canadians. Okay. Next slide, please, Bart. Now, this is an amazing slide because this shows housing starts in Canada and the United States on a per capita basis. The population of the United States is actually 9 times greater than Canada. Everybody thinks it's 10 times because it's just easier to say 10 times and do the math as a rule of thumb, but it's actually 9 times, almost exactly 9 times. So if you adjust housing starts based on that 9-to-1 ratio, there has not been 1 month, not 1 month, since January 2006, Canadian housing starts per capita haven't beaten the United States. That's how much Canadians love their housing. Next slide, please, Bart. And even in the pandemic, everybody, well, I don't know, maybe not everybody, but certainly an awful lot of people thought that because of the declines in employment, that housing starts would have a very significant dip. CMHC thought that. I thought that. A lot of people thought. And I'm embarrassed I'm got egg all over my face because that's not what's happened at all. There was a brief decline in housing starts back in April when they went down to 165,000, but they've shot way back up. And in fact, in January of this year, at 284,000 units, seasonally adjusted and annualized, that's the highest monthly number in decades. And I got another story for you, and it's about population. And right now, population growth isn't anything like it was, but this is really significant for Ontario. I'm a big proponent of population being one of the things that really drives the economy. And before the pandemic, in 2019, Canada's population increased by 500,000 people. And half of that increase was in Ontario, and half of the Ontario increase was in Toronto. So 125,000 more people in Toronto in 1 year in 2019. And 80% of the population increase is immigration. And the Trudeau government has targeted that immigration this year, they want to have immigration of about 400,000 people. So that's really one of Canada's secret weapons. If Canada has immigration, anything like that figure, that means strong population growth. And the more people there are, and as long as they've got decent jobs, the more spending that takes place, and the more help goes towards national output. Next slide, please. I want to get on to the type of structure construction categories. So I'm going to cover these quickly. Ontario housing starts, not the best in the country right now, but still 15%. Next slide, please, Bart. Looking at housing starts in Canada's 6 cities of 1 million population. The one on the left is for all of last year. The one on the right is for the first 2 months of this year. And in terms of level of housing starts, Toronto last year was really dominant. And Toronto almost always is really dominant relative to other cities in the country. But this year, the surge in housing starts occurring is not thanks to Toronto. So this is really quite unusual. Right now, Montreal is leading in terms of level of housing starts. Next slide, please. And in terms of percentage change, last year the country was led by Toronto and Ottawa. In singles and in multiples and in total, it was Toronto and Ottawa that led in percent change 2020 over 2019. This year, those 2 cities have obviously decided to go on a break, and it's Montreal that's leading, and Calgary and Edmonton and Vancouver, so far, only 2 months, have had decent pickups in percent change in housing starts. Next slide, please. And this one just shows the percentage changes for something like 30 CMAs across the country. Next slide, please. These are our forecast starts numbers for the 4 provinces in Canada that are the biggest economic engines: Ontario and Quebec and Alberta and British Columbia. And I just provide that. If you want the speech, you're welcome to it. And we can send those on to you. Next slide, please, Bart. And this just shows those numbers graphed. Ontario versus Quebec versus Alberta and versus BC. Okay, now we come to the types of structure. Next slide, please, Bart, and I'll slow down a little bit from here. These are Canada, and these are the starts, construction starts, ConstructConnect's construction start statistics nationally. And the reason that I'm doing it for Canada is because you can see the trends and you can see the cycles better when you look at Canada, because the Canada figure won't be as influenced by a large project or two. So in terms of single family construction, this is where residential is happening right now. And it's because, well, who wants to get on a crowded elevator? I mean, that's certainly part of it. And housing in downtown cores, like the condos and so on, it's getting very expensive. So people have been moving out to the suburbs, and millennials forming their families, they want to recapture the lifestyles that their parents and grandparents had. And interest rates are ultra low. So it's the single family market that's really doing okay. In the multifamily market, no, not so much. As I say, certainly at the beginning of the pandemic, there was the impression that downtown living was not a particularly healthy lifestyle. Now, just so you know, though, if you're talking about immigration driving the economy, it's the non-permanent residents, temporary workers and foreign students who account for a lot of demand for rental housing, and a lot of condo construction is to be rented out. So Canada needs to get back on that population growth path. Next slide, please. Bart, can you go ahead one, and then we'll come back to this slide. Yeah, just to wrap up this residential one, we'll be reviewing our starts forecast this month. I suspect that we'll move up that residential chart there. And then in terms of roadwork construction, the reason I've got it sort of in this residential section, well, first, it's fairly stable. If you look at the numbers, they're more stable than you might think that they would be. But it's also a lot of roadwork ties in with suburban residential construction. Okay, now if we can just go back to one slide, because I think this is really one of the big question marks for the economy as a whole and for construction as a whole. And that's what's going to happen with office building construction. Because vacancy rates have shot up. This chart gives the latest, actually these aren't the latest numbers from CBRE. They came out with a report yesterday. But anyway, these will, I guess these are going to have to do for the moment. So for Canada, the vacancy rate in office buildings, all classes downtown and suburban, is 13.4%. And in Calgary, you'll see it's 27%. And that's an indication of how much the Alberta economy has been suffering. And in Toronto, they're 11%. Now, between downtown and suburban office vacancy rates in Canada as a whole, there's not an awful lot of difference. But in Toronto, there is. The downtown office vacancy rate, 7%, and the suburban rate, 15%. And the sublet rate has gone way up. Now, the only thing I would say with these, the office vacancy rates have obviously increased. The latest figure for downtown Toronto, by the way, is 9.1% from CBRE. But I don't know how you even really come up with a number here, because tenants are holding on to properties. Their employees aren't there. So the actual vacancies, one has to believe, and certainly the big increase in sublet space indicates this, that there's a lot of empty space in office towers. And that's what you hear about the canyons in downtown Toronto. So the big question is, are people going to go back to work in the office towers? And the pendulum has swung from being very strongly on the one side, mainly because there was a huge increase in demand for space from tech companies. But of course, it's the tech companies that realized pretty early on that they could have their workers employed from home and be effective. So are they going to go back into office buildings? So the pendulum has swung from way over on the one side to way over on the other, and it'll probably end up somewhere in the middle. There's a lot to be said for working in an office environment. It's easier to train staff if you're there to look over their shoulder than to try and do it over the internet. And it's easier to collaborate. Even meeting people in the hall, you can talk about things and get things done that way. And then there's the whole matter of, if you're an ambitious young man, you want to be able to suck up to your boss in person rather than trying to just do a phone where you might become a nuisance. Okay, next slide, please. And I guess we're on to the next slide after that one. Next slide, please, Bart. That's it. Okay, so shopping and retail. Well, we looked at bricks and mortar retail, and we know that sales there are way down. And the malls, some of the malls are in trouble. There's big malls, 555, for example. It's had to give up equity stake because it missed some loan payments. So JP Morgan and Goldman Sachs now have an interest in some of the mega malls that it has. And it's hard to imagine that bricks and mortar retail is going to be a real strong growth category for construction in the next couple of years. Now, the one thing that I will say about Canada relative to the United States is that some of the biggest commercial properties, and this goes up for office buildings as well, they're owned differently here than they are south of the border. The owners, some of the biggest owners in Canada are the big government pension funds. And they're more stable, and they don't have to respond to shareholders the same way. And they can stick things out longer. So that's an advantage that we do have here. Okay, moving on to warehouse construction. You don't have bricks and mortar, and you've got huge increases in sales over the internet. Then you got to have fulfillment centers and distribution centers. Now, here's an example out of the US, but it's the same sort of thing that's happening in Canada. In 2019, there was a huge surge of mega projects in the US, where a mega project is defined as $1 billion or more each. And that's because they're big energy projects. And there were other things too. There were rapid transit projects and so on. But then in 2020, mega projects, when they're defined as $1 billion, they dried up. They went from 71 down to 19. However, if you redefine a mega project to be 1 million square feet or more, there were just as many mega projects in 2020 during the height of lockdowns and everything else as there were in 2019, which is really kind of stunning. But the reason is because it was big data centers and distribution centers and warehouses and that sort of thing. And the companies that engage in this, your fan group of companies, Facebook, Amazon, Apple, Alphabet, Microsoft, Google, Alphabet, Google, they entered the pandemic with all kinds of money. And they took advantage of the opportunity to buy real estate and to go ahead and proceed with projects, plus the fact they made a ton of money fulfilling orders over the internet. And so the warehouse market, it's hard to see how the warehouse market isn't going to continue to be a strong source of demand for construction. Okay, next slide, please. Hospitals. Now, in the last recession, the federal government aligned with the provinces, and there was a big surge in infrastructure spending that was on hospital construction. And you can see the big peak there. And then that was followed by years of fallow demand from hospitals. But it's come back. And there's an aging population, and there's pent-up demand for services. People have been postponing procedures that they could have because the hospitals have been needed for coronavirus patients. And so, and even in the recent Ontario budget, there was money allocated for a number of major hospital projects here in the province. Education construction, it looked like Canada might really catch a step on the US, because under the previous administration, foreign students weren't welcome the same way, and they're looking to other countries. And it looked like Canada might be able to pick up tuition revenue from some of those students. But with the Biden administration, that's probably going to be more welcoming for foreign students again. So I would think that education construction would be more along the trend line that relates to population growth. And you can sort of see a trend line going straight through there. Maybe the more interesting subject in terms of schools is the design and renovations of schools and how new schools will appear, because the contagion is forcing some changes that are going to have to be made through building codes and what owners are going to demand. And I would say in three major areas. One would be contactless, like everything, all buildings are going to contactless. So you don't have to push buttons, you don't have to flush toilets, turn on tap, and that sort of thing. So anything that is antimicrobial will be a building feature. And then flexibility, that's another one. I came across this saying the other day, and I really like it. The trend is probably going to be less sage on a stage, which is the way education has traditionally been. You get a professor up there in front of a classroom. Flexibility, more one-on-one interaction, and so on. And then oxygenation, that's what I'm calling it, or ozonation maybe, I don't know. But it's getting more outside air into the indoors. Next slide, please, Bart. And manufacturing. Okay, well, manufacturing, there's a number of trends to be aware of. The USMC agreement, US-Mexico-Canada agreement, USMCA, that's going to help Canadian manufacturers. And then there's the low value of the Canadian dollar, and there's deglobalization, and then there's Buy America of the States, which would be concerning for Canadian manufacturers, but I don't know. There's so many Canadian manufacturers are subsidiaries of American companies. They kind of are used to just calling on their Canadian subsidiaries to supply things anyway. So I'm not entirely sure. Capacity utilization rates in manufacturing in Canada, they're higher than they are in the United States. And it's certainly good news that General Motors has announced multi-billions of dollars of investment in Oakville, and Ford multi-billion dollars to be invested, GM Ford in Oakville on electric vehicle production. Next, where are we? Oh, yeah, all other civil. So all other civil. And here the standout categories were rapid transit and airports. Before we went into this bad situation, there were any number of major airport expansions planned and rapid transit projects planned. And some of this will still happen. Rapid transit may be more than airports, because you saw the numbers on the airports. They're really disastrous. But I kind of wonder about waiting a little while to see what happens with commuter traffic. On the other hand, even driving into Toronto with a lockdown, there's still a tremendous amount of traffic. And the Ontario budget included plans for transit projects in the city, and then there's LRT in Hamilton, and there's other work in the province. Next slide, please. As for airports, well, yeah, again, you gotta wonder how quickly that's going to happen. But Hamilton Airport, for example, which is a major courier delivery site, overnight delivery site, there's work going on there, and there's actually money that's going to be spent on Highway 6 from the airport to Highway 403. Okay, so total engineering construction, when we get into that subject, I think the most interesting question is, where is Ontario with electric power? And I don't know that we have a clear plan. And the reason I raise this is because electrification seems to me like one of the real obvious things that's speeded up, that's accelerated on account of the pandemic. I mean, GM has announced that they're going to decarbonize by 2035. The Biden infrastructure plan calls for 500,000 charging stations over the next 8 years. Is Ontario going to be able to keep up with this? And the Pickering station is slated to be shut down by 2026. So where is the power going to come from in Ontario? Now, there's another aspect to this electrification question, which I think has relevance for Ontario, Quebec, and that's the issue of commodity demand, because it's nickel and lithium are really two of the prime materials that are going to go into batteries, which are going to be used in cars. And by the way, the military is going to be increasingly dependent on battery power as well. So nickel, Canada's got. Lithium, not so much. Major lithium producers are in South America. And then copper, and Canada's got copper. And it's copper that's needed to bring the power from solar stations and wind farms to customers and clients. So nickel and copper. Did I mention before too that when we were looking at exports, Ontario's been exporting gold like mad. Okay, so one final slide, please, Bart. And this is my leading indicator slide, because it comes out every week, and it's U.S. initial jobless claims. And you might wonder, what the heck? But I remember when initial jobless claims in the U.S. soared to 665,000 in the last recession. And look at all the years, because it's the inside graph there. Look at all the years it took to have that number come down to first cross 300,000, and then it actually bottomed out at 200,000. Well, initial jobless claims, the weekly figure, has been above that 2008, 2009 peak period for a year. 2 weeks ago, it dropped down for the first time in a year below the last previous peak, and then it's gone back up again. So there's just a long way to go for labor markets to get back to where they were. I'm optimistic about the general economy. I'm optimistic about stimulus money that's being spent and so on. But there's those caveats and yellow caution flags that I was talking about. Anyway, that's it for me. Back to you, Bart.
Excellent. Well, thank you, Alex. If anyone has any questions, we've got a few seconds, so feel free to type your question into the question pane. The one that we have received, you indicated housing which are up 25% last year and significantly above the TSX. Do you see that continuing?
Oh, yeah, the housing thing, that's from CREA, the Canadian Real Estate Association, and they're saying that housing prices on average in Canada are 25% higher than they were a year ago. And the TSX from way back in February of 2009 is up 120% or something like that. So it's on a per annual basis or whatever. Housing prices are just really incredible. So no, how can they? So no, but I've said this any number of times, as have so many other people. But no, they can't keep going up like that. This is nuts.
Okay.
So, but but this is the Canadian identity, it seems to be, to buy a house, and people, and it's hard to figure. But this will probably continue for another number of months, and then people will be getting outdoors or something. I don't know what, but 25% increase in house prices year over year.
Yeah, it's very tough for new people to get in the marketplace.
Well, yeah, it's if you got kids trying to get into the market, they gotta go and live really far away, and then they're commuting and they don't want to do that. Except, as I say, you can now work from home, so that does give you an opportunity to live further away and afford cheaper housing, and that's why places like Barrie and so on, and cottage country prices in cottage country have gone wild, because people recognize that they can work from home, and they can work from a cottage as long as their internet holds up.
Yep. Okay. Giovanni, I see jumped in. Did you have any?
Jumped in. No, I just wanted to. I think you know what, you're correct, Alex. It's unsustainable. 25% increase, year over year is unfathomable. At the same time, though, you know what? Perhaps we have an opportunity with downtown being emptied out. We can change all those office towers into residential. I'm trying to think outside the box, people. Anyway, we do want to take the opportunity and thank both Bart and Concrete Ontario for sponsoring, and Alex, incredible forecast. I love your candor and the fact you never take any prisoners when you're delivering your presentation. Thank you very much for that. I do want everyone to know that we have the next session is at 4:00. And that one is working with consultants. I will tell you that it's sponsored by Trisura Guaranteed Insurance Company and presented by Singleton, Urquhart, Reynolds, Vogel. And it will tell you all of the secrets you need to know on how to properly deal with consultants. We are going to actually dispel all the myths in a half hour. And in the interim, I would welcome everyone to join us in the lounge and continue networking with all of the presenters at the table. So with that being said, thank you again for the presentation, gentlemen, and thank you all for participating.
Excellent.
My pleasure.